big sigh of relief for not getting into the wrong deal and then ending up in a really bad situation.
For you is what ultimately sounds like it killed it. The risk jumped to a level that was too high.
Just do not have the same level of attention to detail when it comes to running their books.
So yeah, definitely emotional.
Yeah, I think that the learning experience was worth the time, emotion, and capital sunk into it without even a blink.
So, okay, the deal's dead. What's the next step?
We said acquisition in 1 year. I'm here and sticking to it.
Oh, welcome back to JackQuisitions. Today we have a big update in the Chris Barr saga. What's going on, Chris?
Ooh, we have updates indeed, man. Good to see ya. And yeah, this is a bit of a roller coaster. A lot of mixed emotions here, but the most recent deal is officially dead. We have killed it. So, and it's again, part of me is bummed. I still love this deal for a lot of reasons, but I have a lot of weird pride in the ability to walk away when I knew that was the right decision, as difficult as it was. And it feels there's a big sigh of relief for not getting into the wrong deal as much as you might have loved it, rather than pushing forward at all costs and then ending up in a really bad situation years down the road.
If you like what you heard and want more content like this, head on over to JackQuisitions.com or click the link below to sign up for the weekly newsletter. Yeah, and I think you and I had a good conversation offline about that, where we were talking about, I'm going to be very generalistic here because I still think you're under NDA, right? But we had a big talk about, you were asking about multiple compression and things like that. Should you change the multiple on the deal because of X, Y, or Z? And what it came down to in our conversation was, is the risk worth whatever you're going to pay? Because I had this conversation actually 3 times that same week. So you were the first one, then I had it 2 more times. And what I need people to remember is that a multiple is just a way to value market, right? It's not necessarily the way that you should value your deal. At the end of the day, it can be a poor metric as well for your specific deal. Because, for example, and I think I gave you this example, I could give you a 300x multiple of whatever you're asking, but I could say that the purchase price is $300 million, but it's as a revenue share for 1 year and blah, blah, blah. Or if you hit that $300 million on a $1, net deal, at the end of the day, the risk is mitigated in a different way outside of price or pricing creativity, not the price itself. So it's really just focusing and understanding, like, hey, what is your risk profile on this deal? And that for you is what ultimately sounds like it killed it. The risk jumped to a level that was too high.
Yeah, and we had talked about this multiple times. If you mitigate risk by 2 factors, one is thorough due diligence and doing, thorough digging and kind of uncovering things that could be problems down the road. And your second form of risk mitigation is price. Every business is worth something. If you have a lemonade stand churning out $5 a week, I'll pay you $100 for the lemonade stand. I'm not going to pay you $100 million for it. So they're all worth something. It's what is it worth? And I think that, again, keeping things vague, essentially the straw that broke the camel's back was, we uncovered some discrepancies that led to a pretty significant drop in what we've averaged out the SDE to be. And they were not willing to drop price in line with that. And so that's what really got me focused on multiple of like, if they're not driving price in line with the SDE, then I'm going to pay a worse multiple that I agreed to at LOI after I've uncovered all of these myriad of issues. So I was like really stuck mentally on that. And when you kind of zoomed me out and were like, hey, listen, does the purchase price justify the risk that you would be taking on? I kind of was able to go back, really zoom in on what my most likely take home income would be in reflection to the price, in reflection to everything else that regarding the ops, et cetera. And I'm like, yeah, juice just isn't worth the squeeze for a take home of this to come out of pocket for that kind of purchase price. Like I just couldn't get there.
Yeah. And so with that, what I want to dig into first is there's a few items. The first one is deaths of deals. I mean, I had 2 Like it's a somewhat normal thing as you go through the purchase of your business, buying businesses, just because, right, there's a due diligence process for a reason, and that's where you found out that, hey, what they presented wasn't fact. And so for you, what part of the due diligence, how did you uncover that? Or where, you see where I'm going with this? Like, where was the uncovering? How is it uncovered, this information?
Sure. And I gotta
I know, be careful.
yeah, I've got to be tactful. Yeah, no. But and also just kind of one quick note on overall the art of killing deals, I guess one could say. It was something that I found in my research as I was getting ready to go into this process. I think the average searcher kills 2.5 deals before they close on their first one. So like I knew that time and money would be spent for a deal that I had to walk away from. And it's like almost like owning a pet. You like know that you're gonna have to say goodbye at some point. And conceptually you can accept that, but like when you're face to face with it, you're like, oh man, this is emotional. Like this is tough.
Yeah.
So, but what really kind of uncovered it was there was a lot of going back and forth regarding the books, and the most reliable.
I think you can say why. Like, I don't think
Yeah, the
it
most
goes.
reliable numbers really were going to come from bank statement
Mhm.
analyses. And so once we really got the number dialed in based on what the bank statements were telling us, that constituted a drop. And then there was a drop from another operational discrepancy that got uncovered. And you put both those together, and it's like, hey, man, like now we're really seeing the SDE is this compared to what we thought it was going to be at, we went into this at LOI. And so it was, and their kind of counter argument was, hey, listen, our bookkeeping's not the cleanest, and there's probably hidden potential in here that you would be able to capture that we're not able to necessarily price in our account for, because we recognize that our books aren't as run perfectly cleanly and perfectly accurately. And I'm
Yeah,
like,
so you take the risk,
yeah,
sir, on
yeah,
like a big
yeah,
potential. Like,
and
hey, it could be great. There could be hidden gems and surprises in your favor in these books. But I think like that's the way that a good due diligence process from a financial aspect needs to be done. Is it
yeah,
sounds like your bookkeeper or your DD team went through in quality of earnings and rebuilt their P&L, rebuilt their books, looked at their deposits, and went, hey, there's a big miss here, and
well,
it's not exactly what we initially thought it was.
and I think that the argument was kind of going along with the back and forth was, well, this could be everything that we initially said that it, would be. We just don't have the ability to concretely prove that right now. And I'm like, that's great, but with the best information available to me at the time,
Yeah.
this is the number we're getting. So if you're able to present different info that's defensible and accurate, happy to adjust my offer. But in like without that, this is the info I have to go on. This is what I got a price on. So
Yeah, I mean, I think that's the right way to do it. I mean, I can't tell you how many owners I've talked to who, once again, we go back to the, hey, yeah, I take in 30,000 a year in scrap off the books, and they're like, well, I'm not going to count $30,000 in scrap unless it's on the books, because that's an other income source, not a, hey, I'm doing this semi-legal thing with the government, not knowing around the back. Not saying that that's what they were doing. I'm just
yeah.
saying that in general, you get this sometimes working with lower middle market is
Mhm.
owners who are prioritizing different things, or their books are dirty and they're telling you, hey, I promise it looks good, but at the end of the day, like, I think this is the right move from what you just said is
Yeah.
the risk became too high for my take home. You're the one who has to PG your commercial properties. You're the one who has to put your life on the line. You're the one who's going to,
Yeah.
drudge through the mud for the next 3 years trying to get this thing up and running. Like, you can't run that starting in a poor spot, because there might or might not be some hidden gold that nobody can find and you can't present at this time.
Yeah. Yeah. No, it's tough. And again, I think that it wasn't necessarily them taking like scrap or a situation like that. As you said, not you weren't saying that that's what they were doing. I
Yeah.
think that it really was that they're true blue operators, man. Like that's where their heads at, and like they just do not have the same level of attention to detail when it comes to running their books. Which, like, that narrative makes sense. And honestly, like I appreciate that they've been so well focused on maintaining good, solid operations this whole time. But again, it leads to a lot of gray area that we just weren't able to work through.
Yeah,
So
risk, just
yeah,
risk.
yeah,
And so now you have to take that risk that you are now paying for.
yep,
So,
yep.
I mean, I think that's the right move. It's unfortunate. I mean, for a lot of reasons. A, you paid a bunch of money to do the due diligence, to go, and your time. I mean, you've been working essentially with and in the business for like the last, what, 2 months?
3 months. Yeah,
Three
yeah.
months. So, yeah, definitely emotional. And yeah, time, money, it's all part of it. And unfortunately, that's a rough one.
A lot of sunk cost for sure. Definitely emotional because again, it just hit so many boxes that I initially
Yeah.
just like, before I even found the business, said like this is my ideal business, and like on paper that was it. So I think that was really hard. I also just got like really really close to the owners and had a really good rapport with them. Still do. But as far as the capital sunk in, like trust me, I looked at that number the other day. I was like, whew, like. But at the same time, for how much I learned and how dangerous I'm able to be coming out of the process, so worth it. If you were like, hey, there's a tuition in acquisition school and it's this dollar amount and you will come out with this level of knowledge, oh, I would have paid it in a heartbeat. Yeah, I think that the learning experience was worth the time, emotion, and capital sunk into it without even a blink. Yeah.
Dude, absolute school of really hard knocks.
Dude, no shit.
I don't think I sunk 3 months into a deal, but I've definitely sunk, 5 figures, multiple
Yeah.
5 figures into a deal that ends up dying, and it hurts from that side too. You're just
Oh
like,
yeah,
oh,
it's a bit of a whack in the pee man.
yeah.
Yeah. So.
So okay, so you killed the deal. Is there any large takeaways as you come out of this going into your next? You learned a bunch of stuff, but is there any large takeaways that you're like, man, I wish I knew going into this that I'm going to take into my next deal that we go under LOI with?
No. Well, yes and no. I think that on one hand, it's been, I'm always like second guessing myself. I'm like, am I really doing that good a job? But I feel like a lot of the outside input has been like, man, you were running for a first timer, like you are running a pretty dang thorough and solid DD process here. So I think that that's been validating. Again, I still second guess that a lot. But I think we really did a good job of turning over the stones through the DD process and kind of, checking all our boxes. I think that the main thing is I would just do that a bit more efficiently and I would be a bit more prepared for kind of the flow of operations and then
Yeah.
kind of the process going into it next time. I think there were some lags with relaying stuff. I think there was some issues on the front end, kind of me delegating to my team and kind of putting myself in the position of relay man too much and clogging up my bandwidth. So I think just more proficiency in how I go about the process. But I think
Mhm.
that the checklist of what we went through was pretty solid. So I wouldn't change much of that up. Just kind of more of the order and how I go about executing on it and getting it done.
Not to
Um,
play a game of shoulda, woulda, coulda,
yeah.
but I know that we specifically had the conversation really early on as you were going into
Mhm.
or kind of coming out of LOI. And that conversation was, hey, make sure you do your financial due diligence first, because if you go into do legal and you go into start doing operational, you can kind of do operational at the same time because it's a time sink, not a money
Mhm.
sink.
Yep.
But if you find big issues with the books, which you inevitably did,
Yeah.
issues in your issues to you, not necessarily issues with the books themselves. I'm going to be very clear how I say that.
Yeah.
But issues to you with the books, you could have saved a little bit of money on APA drafts and anything like that. Do you think that in the next deal, you're going to make sure that you do your financial due diligence quicker? Or do you think, hey, like there was no way to actually get around what we found at the time we found it?
Yeah. No, I think it's a great question. I would say, yeah, coulda, woulda, shoulda a little bit. Like I could have held off on an APA draft and not sunk dollars into that. But at some point, it's you kind of have overlapping streams of activity. As you said, financial definitely comes first. Wouldn't change that at all. And I think we really did lead with finances on the front end,
Hmm.
for sure. And again, attorneys involved, they're lobbing over their list of, hey, send me these documents. But I wouldn't say we were like really thick in due diligence. We're just kind of getting the ball rolling with that. Um, but we really led with finances, and again, there's a lot of back and forth, a lot of lags and delays, and I'm working on ops DD that entire time. So I think that went okay. Could I have held off on an APA draft until we really buttoned up the financial DD? And could I have saved a couple grand? Like maybe, but I think
Yeah.
that honestly, if I had it to do over again, I was starting with a different attorney. Had my reasons for starting with the attorney that I did, and I don't necessarily regret that, but definitely made a wise switch, kind of midway through, which was a bit of a hiccup. But I think that it's, again, get all parties kind of involved in the deal early on and get kind of balls rolling, because you don't want to spend all this time on financial diligence. But like, okay, now we have to draft APA. Now we have to get this ball rolling from standstill on the legal side. So to kind of have some momentum going on there while the majority of focus is on financials,
Yeah.
I thought worked well.
If you're looking to buy or sell an HVAC or plumbing company, you need the best, not some generalist who just sold a Subway franchise last week, but you need the absolute GOAT of HVAC and plumbing M&A. And that's why I work with Patrick Lang at Business Modification Group. Patrick has sold more HVAC and plumbing businesses than anyone I know. He knows the buyers, he knows what the company is worth, and he knows how to get deals across the finish line. If you're an owner thinking about selling, or you're a buyer looking for your next deal, Patrick is the guy to go to. You want him in your corner, click the link below or head on over to businessmodificationgroup.com/JQ and get on his newsletter for exclusive deals, or sign up for a free deal review and see what a business is worth. Yeah, there's definitely a balance towards the end of DD where you could say, hey, I want to start my APA. Everything's looking pretty good. We're okay with ops. And then you start it early to be able to finish. It's really a close rate thing, like how fast do you want to close? Because at the end of the day, there really is no, outside of the proposed 60-day close, but if you finish DD, there's very few buyers that are going to back out because obviously you probably had some kind of 60 or 90-day close and you overstepped that. But the process is pretty easy to get an extension. You're already both invested. Most likely you guys are somewhat friendly terms, so an extra 30 days is not going to kill anybody to do legal unless you want to close fast. There's people that want to close fast for a reason. You want seasonality. I wanted to close extremely fast, so we made sure that we ran them the same time on my first business because I wanted to start at the beginning of summer to catch that summer capital going in. So there is the reasons to do it. But yeah, I was just curious on next time if you felt like you would hold off a little longer. It sounds like you could have, but maybe not.
Now, for this deal particularly, we also had seasonal issues that was kind of rushing the close timeline a little bit. So I think that definitely had something to do with it. Mm-hmm. So I think it's a little bit situation dependent, but overall, I got no major beef with kind of how I handled that part of the flow. So
last question on this deal before we move on to what's next is, did you get a chance while you were working this deal to start in a big question that people always avoid and try to not think about? It's one of the hardest discussions to have, working capital. What was your idea? How did you figure out what the working capital was? Did you figure out what the working capital was? And what was your plan moving post-close to deal with working capital?
Yeah, it was, it's something that's actually probably something I would have maybe broached earlier on, but at the same time, I kind of don't kick myself for not. There's a lot to kind of figure out really before you crack that nut. But kind of once we got to the discussion, we were hitting a lot of the heads with pricing. And I'm going to acknowledge on the front end, I'm probably thinking about this all wrong. And I probably need some coaching and schooling for a better way to go about the working capital discussions. But for me, it was kind of rob Peter to pay Paul a little bit of a thing. It's like, either listen, I can raise my purchase price or down at close price by however much you're kind of willing to leave in the business, and we can kind of like meet in the middle on that number, or you guys can leave nothing in the business, and then I'm going to have to like lower my purchase price to be able to finance some capital to have for working capital. So it's kind of like, whether you guys want to fund it and take a higher purchase price, or you guys don't want to fund it and take a lower purchase price. Like, again, robbing Peter to pay Paul kind of a situation was how I was seeing it. So it didn't
That's a
really
really good
cost.
way to put it, though, honestly. Like a lot of people miss out on that and they don't think about it early on just because they're going, hey, I need to get the business closed. I need to buy a HVAC or a pressure washing or this business or that business. And they buy and then they get to the end and they go, oh, I need money to actually operate this business. So working capital, right, is your operating capital
Yeah.
day one. And
Mhm.
so a lot of people forget where that comes from. And because you were going stock sale, right?
No, no,
No, you
no,
were going
no.
asset?
Yeah, yeah.
Okay, sorry, wrong person.
No,
I
no,
talked
all
to a
good.
lot of
Yeah,
people
yeah.
because, like in stock sale, a lot of the AR converts over. It's really easy,
Yeah.
and so, but that makes sense that you were just going to raise purchase price or lower purchase price depending on where you do it. That's
And we
usually
were
the
going to
best way, to be
capture,
honest.
yeah, we were going to capture full AR too, so that was kind of already a piece of it. But
Yeah, we
they
talked about
do.
that. Were you paying? You were paying 100% for AR, or is this
No,
also
no,
a
no,
different
no.
person?
And that's what really where, I can't. I gotta be careful.
Yeah,
But
don't say.
oh,
Um,
that was an issue with the books that kind of led to the
yeah,
discrepancy between that and the bank statements, et cetera, et
so
cetera. So
because that's a great way to get AR though is
yeah,
immediate day one. I think we had that. I think maybe it was a conversation with someone else, but just making sure that you're not paying 100% for that AR. It was
well,
Sweetwater Plumbing. They paid
yeah,
100% for AR, and it was a large conversation about making sure that you have to put time and resources into AR to get it. So
yeah.
80%.
Well, I think it also depends on kind of what category of AR. If you're looking at like the 90 plus category, that's more like a 50% number. If it's like 30 days and under, and they always get paid lickety split, and they've got a good system for it, I could almost see justify paying 100% for that.
Yeah, long-term
It just
customers. It depends.
yeah, it's
I'm
again
actually
very
okay with
dependent.
that.
Yeah.
Okay. Yeah, because the other way to do it right, especially in home service businesses, more so along the lines of the SBA, which I know you're not going to, but just for
Mhm.
everyone else out there, most SBA lenders will tell you, and in home services, the cash flow cycle is pretty quick, and your
Yeah.
DG should uh, work with you to give you kind of an estimate of what you're going to need.
Hmm.
But the other way is a line of credit.
Yeah.
Right, you can
And
go
that's
grab SBA line of credit, which is I think an express loan, and they
yeah.
just pretty much tie it onto your package, whatever you're getting on the 7A, and you just pay two loans. One's an express and one's a not express. It's a pretty good. I mean, it's a decently high rate, but it's SBA, so
Yeah.
they're really easy to get, and one really good way to do it on home service businesses. I can't speak to like manufacturing and stuff because that world, it like blows my mind. It's like, hey,
Yeah.
you
Yeah.
need 3 million in working capital. I'm like, oh my gosh, payment terms are like 6 months out on whatever, trinket you're selling,
Yeah,
but you need to continue to make it. And I'm like, I can't imagine. It's like farmers, man. You work all year long for like one harvest, and then you
yeah,
get
for
this
just like
giant
those
pay,
months.
and you're like, okay, now I can pay off all my debt from the rest of the year that might or might not come in.
You
Wild
know,
stuff.
and before we move on, I just wanted to like zoom out and also just like have kind of like I had like a light bulb moment come on. And I was gonna say like pats in the back, not really to me, but to my team, the mentors I have outside the space, you especially for kind of helping guide me through it. I coming from my first episode where like I didn't know my ass from a hole in the ground, and now I'm sitting over here having nuanced discussions about like what percentage we're valuing A&R at. Like
Yeah.
that growth cycle within a few months has just felt nuts, and to kind of like be able to zoom out like wow, we are having a totally different set of discussions than we were on the front end. And again, I would not have been able to get to this point without you and all the support I've had along the way. So mucho apreciado, man.
Yeah, no worries. That's why I do it, because I remember those moments too, and being just like, wait, what do I do and how do I do it? And I got lucky that I just found my way through and ended up getting screwed by buying a bad business, and then was okay by coming back. But like, if I could help a few people not do that, that's wonderful.
Yeah.
Sweet. So, okay, the deal's dead. Potentially, right? If they figure out what that gold is and they're like, hey, we're able to find these books and come back, like there's obviously a chance that it can resurrect. They like
Sure.
you like them, not a big deal. Nobody ended on bad terms. But
Mm-hmm.
in the meantime, what's the next steps? Are you out all the way? Are you staying in? Where are you
Oh.
moving?
Oh yeah, I'm here, baby. I'm here for the long
Hey,
haul,
I'm
man.
just
I ain't
checking.
tapping out on you, man. We said acquisition in 1 year. I'm here and sticking to it. But yeah, hopping on back on the search. and I have just plug and played back to what I was doing right before I found this deal. Yeah, but that being said, it's a really good opportunity. And I think my noodle needed a little brain space after killing this thing to kind of step back and zoom out. But really going back to the drawing board, how can and I mean like really back to the drawing board, and one thing is just the search mechanism. Okay, how can I make it more sophisticated, make it more formal? I was doing kind of like hand jammed, trackers on Excel that I made myself. Like, can I formalize into a more legitimate CRM to track this process better? We've talked about lead sourcing, early on, but like, let me reapproach that. Let me do that better, sharper, faster, more efficiently this time around. So there's just the search mechanism, but then there's also kind of like my criteria mindset,
Yeah.
and again, I went in with a very plug and play mindset. Like, okay, I've talked to my lenders. I know that I can afford this range without bringing in a lot of outside capital or overcomplicating it. But like that restricts me. There's only so much, such a restricted and compressed purchase price size, they're not going to have very sophisticated ops. The SDE is going to only get so high. Can I entertain bringing in some outside capital in exchange for some preferred returns to look at bigger deals that have a bit more legitimacy behind them? And also sectors. I loved pressure washing in Palm Beach, but having had some exposure to that sector, I don't know that I really want to compete with these guys that I just passed on. So I don't know if there's another business in the area and researching competition. There wasn't another one I found that looked attractive. So do I want to pivot back to pools? Do I want to look at landscaping? I like the idea of HVAC, plumbing, more of the owned and operated bread and butter, but I'm not licensed. And I installed some window AC units in like college, but like I'm no HVAC pro. Like, and I want a business that I'd feel confident putting
Hmm.
hands on. I could learn pressure washing in a pretty compressed time frame. I can't get licensed in HVAC and be a pro in that in a compressed time frame. So how do I bridge the expertise gap if I'm going to start re-examining sectors? So this is a snapshot of the big drawing board I'm currently staring at all day. So
Interesting. Interesting. Yeah. So you're moving back. You're trying to figure out how you're doing it and what sector you're doing it in. Um, did you walk away with the increased knowledge of pressure washing and decide like this is still where I want to be? So first episode you said like this is what I want to do, or are you just still along the same mindset? Because correct me if I'm wrong, but
yeah,
that mindset's more of what you said at last. Just this last piece was, hey, I want something that I can understand and do well out at in the home service field.
yeah,
And I mean, that's a lot of things, right? You could probably do painting, understand painting, no
yep,
license needed. I mean,
yep.
there's lots
Landscaping,
landscaping.
cleaning,
Yeah, there's a slew of these non, I guess, skilled trades, licensed trades that you could potentially pick up.
yeah,
Pest control is a great one. Like there's a learning curve, but once again, it's
yeah.
learnable. And so, are you trying to stay then in that focus, or are you really going to come back and utilize your skills on like, hey, I'm going to be active outbounder. I'm going to actively call these owners. I'm going to actively send mailers to pressure washing companies and see if we can figure something else.
Yeah, again, in my area where I'm really pretty intent on sticking, and again, I had to research what other operators were out there for pressure washing. And there wasn't, if I came across some competition through that search, I was like, oh man, like I would definitely want to hit these guys up if this deal did not work out. Really didn't find that anywhere. And again, like I wouldn't want to have to compete with the deal that I just passed on. So I'm kind of cooling off on pressure washing for that reason. I still love the idea of it. Like conceptually, it would be great as far as like a sector in and of itself. But given the context of my location and what I uncovered, I think that's what makes it tough. But yeah, I think that again, my initial knee jerk coming into this process was those unlicensed trades, landscaping, painting, pressure washing, stuff like that. But now that I'm at the drawing board, I'm like, maybe I was limiting my kind of belief system when it came to licensed trades, and maybe there is more opportunity for me there than I initially gave credit to, and so like maybe that is worth exploring more than I had thought. So, yeah, I'm kind of curious. Like, what was your experience at with HVAC? Were you installing units? Were you working on the technicalities of it before going to the acquisition of one of those businesses, or what did that expertise gap, if any, look like for you?
Yeah, so I mean, it was mixed. So my expertise gap was adjacent, right? So if you think about an HVAC unit, it's the problems you're going to run into, 50% of them are electrical. And so I was already doing high voltage electrical troubleshooting prior to buying the business, but I didn't understand almost anything about refrigeration theory, which is the other 50%. And I still have trouble with some refrigeration theory, like really high end or not high end, but really difficult portions of like how each bit interconnects and which side cools and which side does the heat exchanger here and what happens if this connects to this. So there's a lot still. That being said, same with plumbing. Like we did all of our own plumbing, but am I going to go out and repipe a house? Probably not.
Yeah.
Personally, my guys will do it. I'm not going to do it.
Yeah.
I can snake a drain, but my stuff is more, I guess, handyman and electrical troubleshooting was the background. My thought at the end of the day is I just have the guy who I bought the business from. He moved down to Fort Myers, Florida.
Okay.
And started up a business the next year, and then ended up selling it this year. And that all being said, the point is, it's like he didn't have his license in Florida. He went and found somebody. He knew about selling HVAC, but he was one of the worst technicians I'd ever met in my entire life. Very good at selling, but not a good technician. And so my point of that is there's multiple sides to a business, and the technical side, as well as like the marketing and finance inside, like when you find the business, you're going to have to find those people to run that portion that you're not anyway. So why limit yourself to not running the technical side if you're not going to be running the technical side anyway?
Yeah.
Does that make sense? So like when you go to the pressure washing, you say, hey, I want to be able to wrap my head around it. But unless you're going to be the one actually doing the pressure washing technique itself, you can gain enough knowledge to be able to put a service manager or an ops manager who can handle the technical side, and vice versa, right? Like if I can handle the technical side, I need to put somebody in place who's an office manager who can handle marketing and the bookkeeping, and essentially what those guys were having trouble managing with you, right? And so you have to find your opposite in lower middle market M&A to be able to handle situations that you're inevitably not going to be good at everything.
Probably one of the most important decisions you can make in your ETA journey is which SBA lender you are going to pick. A lender who will be in your corner to get you closed on the deal, as well as set you up for future expansion. That is why we partnered with Alan Peterson from First Internet Bank. He and his team take a how can we approach, as well as I personally know they specialize in home service acquisitions. Mention the show or my handsome bald head and receive a reduced good faith deposit, as well as a detailed deal review and maybe even a buy-side pre-qualification. No strings attached. Head on over to alanfib.com, that's alanfib.com, or click the link below to get connected.
Yeah, and I think that was the tricky part, and I think that's the other thing too is I know this is normal. I know that you've mentioned this on posts and stuff, but I'm still having the second guesses. Like, oh man, did I just let a good thing walk away? And it's natural. But one of the things that I liked about this business is they had a field ops manager in place, and that was already kind of baked into the numbers. And with a lot of these other kind of owner operator where like operators in the field, technically advising, it's like, man, well, again, on a lower middle market deal, I only have so much, SDE available to put in my pocket to make an income on. Now I've got to bring in a ops manager and someone who's technically skilled. So, it's again, dollars available in the deal at the end of the day. So
honestly though, the muscle you just worked out there is a superpower once you get up and running. Like I'm not joking. The ability to walk away from a deal because it's not what you need is one of the strongest superpowers, because a lot of people, I'm not going to label them in any way, shape or form, but a lot of people will feel like they've already, what's the poker term? They've already sunk too much money in, so they're just going to ride it out type of deal. And nothing gets you in bigger trouble than that, because you're not mitigating risk. And so all of the people in our groups, like mastermind groups, they all run 20, 30, $40 million businesses. But they're all amazing at it. They're like, it wasn't good. Price was too high. Offer this, they didn't want it, move on, next one, because there always will be another deal. There's somebody down the road who's going to sell next week or next month, and you just got to be ready.
You unknowingly just quoted like a Barr family lineage quote that's like been passed down through generations, which is there's always another deal.
Yeah.
There's always another deal.
Yeah,
so,
that's probably why you're so good at it, though, is because
it's in the bones.
It's in the bones. It's in the commercial real estate, because it's the same. I'm assuming it's the same in commercial real estate. Like, price is too high on the building, or you get into inspection on a building, and it's like, oh, all of the plumbing is screwed up, and I'm gonna have to spend $60, $100K on it, and you're like, well, there'll be another deal.
Always
and you move
deal.
on. So totally makes sense. Sweet. And how can so surprisingly, there's a lot of listeners down in Florida.
Actually, I ended up getting like fan mail. It was crazy, man. I had a guy right here in West Palm reach out to me. Alex, if you're listening, shout out, homie. But I had someone hit me up and say, hey, listen, like, loved what you had to say. I'm, in West Palm Beach, would love to get together and talk shop. And so that, led to a few different relationships down here. So, whatever the listeners want to hear, man, I'm happy to oblige.
Remind people where they can find you.
Yes. Find me, you can email me at chris@kcacquisitionpartners.com. You can also go to kcacquisitionpartners.com. We do have a website. It's, up and running and looks good. Also LinkedIn, at Chris Barr RE, I believe is my link. I know that you'll post it on your,
we'll tag
on the page, but so feel free to get a hold of me there. So would love to hear from any and all you guys. If you have a home service business in my wheelhouse that is plug and play, that won't be more than 15 days in due diligence, then by all means, lay it in my lap.
Amazing. And follow up on that as well. We are hosting Owned and Operated JackQuisitions. The overarching umbrella is hosting a meetup down in your neck of the woods. Alan Peterson from First Internet Bank's going to be there. I'm going to be there. Maybe Chris Barr's going to be there. It's in like Fort Lauderdale, Miami area. So North Miami. If you guys are interested, it is September 5th. We will also post the link to this in the channel, as well as it's all over my social media. Head on over RSVP, get some information. There's a big group of searchers and ETA and small business owners down in that area. So it's going to be a lot of fun.
Mad posse.
Drinks on me. Just a few though. Don't do too many. All right, guys. If you like what you heard, like, subscribe, reach out to Chris, reach out to myself. Let us know what you want to hear, and appreciate y'all.
Thanks, everyone.